Good day. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100. And today I'm being joined by my colleague, Sascha Gohring, who's also going to be presenting some Elliott work on both the futures market, but both as our preferred and our alternate count. I'm very excited about this, that Sascha and I have now been working together in our trade room, and where I've just been very, very pleased, I should say, with the detail and the significance of the levels that Sascha works out on our intraday charts. In a way of introduction, he'll be coming in after me and presenting his work, but it's a real treat, folks, and I'm hoping that you're just going to hang out with us and listen very intently, because it's going to be the alternate count that we are now putting into place above what we're considering our preferred. So I'm going to start here on the NASDAQ. I'm out on the weekly chart. My preferred count continues to suggest that we have completed back in 2020, actually this is November of 2021, that we completed cycle wave 3, which makes everything that we're doing thus far still a part of cycle wave 4. Now, cycle wave 4 will consist of 3 waves of primary degree, which will be labeled A and B, which we're finishing, and then wave C, which is yet to come in. And then once cycle 4 is complete, we will get an additional cycle 5th wave, large rally, again, back up to new all-time highs, exceeding wherever the high ends up through this process. Now, so weekly chart, we're still within primary wave B. Primary wave B will consist of intermediate wave A, B, and C. So we're within intermediate wave C. So just to kind of demonstrate, I'm walking us through this process of all the waves that are now coming into fruition and actually completing, and how close we are to what I believe will be the completion point for primary wave B. So walked us down, we're in that primary B wave. And let me just add, I'm going to re-add all of my fibs. I'm not buying it. No, that wasn't good, was it? I'm adding. And so we're going to put that in there. Let me just kind of get that up. And I'm just going to reset that, because right now it's set up for all the fib levels for retracements for the primary, or for the B wave, which of course have now all been exceeded. So that puts us into what Elliott termed as an irregular B wave. And what that really consists of, folks, is that we're still within a B wave, which is corrective, believe it or not. But what the market tends to do, depending on the position of this 4th wave, in this case, it's a 4th wave down, so the irregular would come as the 4th wave makes new highs. Now, that seems counterintuitive, because of, wait a minute, if we're in a correction, but we're making new highs, it's an irregular. And he attached particular Fibonacci levels to that irregular form, those being 1.236 and 1.382. And that is where wave B would come in 1.236 times the length of wave A, or 1.382 times the length of wave A. All right, so now, bearing that in mind, so we're going to build our Fibonacci levels once again. So I'm going to come down to my daily chart, and I'm now going to put in the next, which is going to be that intermediate C wave. I kind of got ahead of myself in putting a lot of the others already up, but Sascha and I were in discussion. Any case, here we go. Oops, right there. Come on, there you go. Yep. Okay, so 0.618's already been exceeded. I'm going to remove it because we don't need any confusion on our levels. So what we have left is 1.618, 2.618. So as far as intermediate wave C goes, on a Fibonacci level, the next indication would be that wave C would be equal to wave A at 19,485. That's pretty high. We're still within the 18,000s here. Actually, we're now below. We've been above, and now we drifted back below 18,000. So it's still over 1,500 points before we get back up towards that level, but it's there. It's an indication. And again, Fibonacci does not necessarily, particularly when we are in uncharted water or uncharted territory, it's not suggesting that this is where the market is going to go. What we continue to build on, as Elliott showed us and teaches us, that it's going to be the structure. It's the structure that's going to take precedence over everything else. So again, let's continue on. I'm going to come down now to my 4-hour chart where I can open up to what we're doing again. So here we have, this is, again, let me just open that a little bit. See, there is the intermediate B wave. So we're in intermediate wave C, and intermediate wave C will consist of 5 waves of minor degree, of which thus far we have minor 1, 2, 3, and 4 complete, puts us in that minor 5th wave. So the other fibs that I've now added for minor wave 5 is, what's the fib relationship? The fib for 5th wave, the fib relationship goes back to the 1st wave. So, and the most common for a 5th wave as it relates to the 1st wave is equality, where they'll be equal in length. Well, in this case, it is already exceeded. And I'll just show you that level, because if you're doing it, you'll come up with the same thing. And I'm going to go put that back on. You can see 100% was way down here at 17,593. But that was exceeded. So in other words, it's like, I'm not going to leave it up there because I would find it confusing. So I take it off. And so the next level in relationship to what we're talking about is that minor wave 5 would be equal to 1.618 times the length of minor wave 1 at 18,370. Now, that's the second most common. First most common, equality. Second most common, 1.618. So it opens the door. But now I want to bring up something that's kind of important right here. You're going to see here we have that primary degree B wave. That's still out there, 1.236 at 18,250. Well, now I got minor wave 5 coming in at 1.618 at 18,370. A little bit of a cluster that we're building here. Now, we're going to take it down again. Now we're within this minor 5th wave, and that's going to consist of 5 waves of minute degree, of which we have 1, 2, 3, and 4. Now, here's where the change from last week to this week is taking place. I think last week when we were discussing it, I was also discussing the possibility that this minor 5th wave will ultimately form a diagonal triangle. And what that is, it's like if you can just, with your hands, you make that pinnacle point where you're, what the market is driving itself up to. It's a pinnacle. And we have a lower and an upper trend line that seem to meet and likely right up into here. So, but the difference is that all of your waves, 1, 2, 3, 4, and 5, are all going to be ABC structures. They're all going to be 3-wave structures. Now, within it, particularly in waves 1, 3, and 5, within it, it could come into an ABC, but it's a 5-3-5. This is a 5-3-5 or 3-3-5. And here we have a 5-3-5. Now, other things of note, in a diagonal triangle, wave 3 often is not the longest wave. We see that in a diagonal, wave 1 tends to be extended 3, but still extended. And that wave 5 can also be a little bit longer than wave 3. Yet to be determined here, but the possibility exists. So wave 3 can be shorter than, come in less than wave 1. In this case, it is exactly what's happening. And within the diagonal triangle, wave 4 would be expected to overlap wave one. In this case, it did by quite a bit, but it's an overlap and it fits within. Now, if we're going to take it that it's 1, 2, 3, and 4 is done, I've got another layer of Fibonacci extensions, because that's the tool I use, the extensions tool, to measure minute wave 5 as it's compared to minute wave 1. Now, minute wave 1 was pretty big. So here that's in, and here are our levels. 618 comes in at 18,438, right in that cluster yet again. Now, if minute wave 5 kind of goes what I would call full bore, where it's going to go to equality, that's up there quite a bit. That's 18,992. And guess what? That puts us into that next cluster, right? So now we're here. Here's the 1.382, 19,167. And now, guess what? Here comes the C wave for its equality, C equals A, at 19,484. And then go, look what happens again. Now we have the next one up for the minor fifth wave, which is 2.618. 1.618 gets exceeded, it pushes it up to 2.618. And that comes in at 19,629. So now we're building a cluster up surrounding the 1.382. And remember, we're looking for the completion point of primary wave B. So I'm going to be looking for, and again, if it all goes down to structure, and so if I'm counting correctly, I'm going to be looking for wave C, which is going to be 5 waves of minor degree. Now I'm going to track it out. As one level gets exceeded, it goes to the next. If that gets exceeded, it goes to the next. It's not saying that's as high as it's going to get, because we still have all the other ones in play. Again, not suggesting just because the C wave is 100% of wave A at 19,484 that that's where the market is going. Remember, Elliott told us what will take precedence over the Fibonacci is the structure. So that's why we're paying very close attention to how all of this is playing out. Now, right now, if we're looking at this diagonal, and I'm going to bring it down and put it on my hourly chart so we can go inside this now. Now, look at what we got going on. Here we have minute 1, 2, and 3. And here we have minute wave 4, which we are labeling as complete. At that low at 17,542, which puts us in minute wave 5. What's minute wave 5 going to consist of? An ABC. So really, what can we be going into? This could be A. This can be a B. And if it is, well, that B wave's already come down to, if we're just doing our straight fib retracements, it's already come down to 0.618. So could it be done? Do we have a little bit more to go? Possibly. I could get rid of the confusion and take that off. And now let's just take a look at if this is ABC for that B wave. We can go and we can put up. Actually, I did that wrong. Excuse me. Go back over here. Start it differently. We're just looking for that small little C wave. Actually, may not be that small. So here we have, actually, if we're looking at the C wave, most common, 100%, that's 17,594. But look what it did, 618. And in this case, second most common. It's a C wave, second most common, 17,712. We got there. Closed just above it, but we got there. So could this be ABC done and we just pick up the rally again? Very possible. Very, very possible. So again, if it is done and it breaks back above 17,903, we stand a very strong possibility, a very strong chance that it is A, B, and we're going to go up in that C wave. So we can now remove this back out again. So now we're building our scenario. So we know on just a straight fib retracement, it's already reached that level. It's reached a level where it should hold, maybe put in a little bit additional, Like what do we have like down here a little bit, but not below here. We do not want to see this move break below 17,542. If it does, now we're running in where this fourth wave could really come in and start to overlap. And then we don't want it to break here. And Sascha's going to be reviewing this as well. We have levels that no, we don't want to see it below there, because then what's that going to do? It's going to shift the whole scenario to where, oh, so are we now complete with wave C? That intermediate wave C? Are we complete with the primary B? It could shift. So we're now paying very close to downside levels, which would give us those clues. And this is also going to be important, and Sascha's going to talk about it very cleanly when he presents the alternate count for this whole picture that we're working on. There's a strong alternate, and Sascha's going to present that to us. But right now, we're going to finish up here on what I'm considering what our possibilities are and what we are now looking at. If I'm going to look for continued upside, which I am looking for, then these levels need to hold right now. And if this fourth wave is still in play, yeah, it can, but in my mind and in my book, it cannot break 17,218. The bottom line there. Actually, that level is 17,221. Cannot break it. Cannot break it. If it does, it's breaking wave 2, and then we're going to flip over to a different alternate other than the alternate that Sascha's going to present. I mean, it could start indicating that we're all done and we're going to start dropping in at that C wave and the primary C wave. So again, we're just going to have to wait and see how this all plays out. But right now, I'm expecting and looking for it to hold and for the rally to pick up again. So, and that being the case, once the rally does pick up, we're going to look for it to, at least as the C wave goes, let's just say, for example, that did complete it. This is the other one that I was going to put in. Then we can start to just put our fibs extensions in, and we'll go there. So we have 18,199. So again, we're honing in on this, and that is where wave C would be equal to wave A. Part 1 equal to part 2. But then we got this one, which is more common, actually. So we have that, and then we're inside that cluster that's now gotten wider. But in all honesty, the market kind of has been in that manner. We get these huge downswings, we get these huge upswings. So we shall see. So again, I've just brought it down to at least my hourly. And what I'm definitely still, my own expectations are a continued upside. Primarily because even though Monday is a holiday here in the United States, so that is President's Day. So the regular session here in the US will not happen. We're closed. But Globex will come into play tomorrow on Sunday evening here in the US, and we'll go through I think till 1 p.m. Eastern on Monday. And then we'll reopen again on Monday at 6 p.m. Eastern. And so there's all that can still happen without us so it's going to be the feeling of what's happening in the European markets, what's happening in the Asian markets, what do they think coming forward, and what are they going to start to come back in and start buying. So we got a lot of stuff in play right now. And so I'm just going to wrap it up right there because I want to leave plenty of time for Sascha to come in and begin his presentation. So again, Sascha uses a different charting service. He uses TradingView, and he's going to be presenting an alternate count. So I want to welcome him. And again, I know I'm kind of building it up, but Sascha is very detailed. And as I've said to him very often, his levels and his work in my book is stellar. And so once again, I also want to include that he and I are doing the trade room together. And we have moved the trade room over to Discord, which opens us up to the possibility that we can really have as many people that want to come in. So I no longer will be limiting the number of people, but you'll get the same quality and even a higher quality because Sascha's very, very good on our intraday charts. And so without further ado, I'm going to stop my share, and Sascha, go ahead and join us and put your chart up.
Yes.
And I'm looking forward to it. Make sure to unmute yourself.
Hi, Michael. First of all, thanks for the invitation because I'm very honored for that, and very nice to have that work relation with you, which really, really makes fun. And yeah, that's the first thing I want to say at all. Yes, and as Michael already told you, I am presenting an alternate count today, which is only an alternate count if we are not done with the cycle wave 3, where Michael has labeled it. So on my chart, I have labeled that as a primary degree for now, which consists of a down move in the primary wave 4 and the primary wave 5, which on that alternate count is not completed. I just want to start, first of all, this primary B wave is in my book first and still my primary count. I have just put that up to show you what I will talk about. So don't get me wrong, because this primary B wave scenario does fit better in the global economy at the moment. And we are sure that this problem with which the problem with we are dealing at the moment with inflation and everything does not perfectly fit in that count, but that's another topic. For now, I'm going to start that my cycle degree third wave will finish up here. Michael has it labeled on his primary count and also my primary count as the finishing up here where I have got the primary degree third wave. So we're coming down in the primary degree fourth wave, which finished at the which bottomed at the 13th of October in 2022. So from here on, the part of the question is it an alternate, is it the A wave or the primary degree fourth wave, followed by a primary degree fifth wave? So let's start on that. I'm on the weekly chart right now, and as you see, my levels are extending. First of all, I want to show you one very interesting chart pattern I have on the chart. In my view, we are forming here a very nice, oh, 1 second, I need to do that again. A very nice cup and handle pattern. And I was speaking about that with Michael, I mean, for, yeah, some weeks now. So measuring that target is just TA now, so old school TA. And when I want to measure the target of that cup and handle pattern we're forming on the chart, is taking the measurement from the neckline down to the deepest point of that cup, and I add it on the neckline of that breakout pattern we have here. So the neckline was broken on the, let me see, on the 20th of November 23. From there on, we moved up and consistently moved up. And the part I have, in my view, is every time the chart tries to sell off, someone steps in and buys it all back. Every time they start the selling, it gets bought back very, very soon and very, very strong. I mean, not by volume. The volume up here is not significant. It's not very huge, but it's enough to buy the chart back up, and or the price back up. And that's the problem, or that's the part I am investigating, that alternate count. So that technical target for that move up would finish us about 21,000 technically. That doesn't mean that we're going to reach that level here.
Right. Can I add one thing that's in great support, because when you
Sure.
mentioned the date of November where the break
Yes.
happened, I
Yes.
want people to understand in November of 2023, we had that surge, and it's this vague breadth thrust indicator. And that was a level where the advanced decline soared. So in other words, there were 15 issues rising, advancing, versus one declining. Now, when you put that together, often when it's triggered, which it has a 100% success rate, that within the next 6 months, the market will be 15 to 25% higher than the trigger point. So
Yes, good point.
what did Sasha
Yes,
just show us?
yes,
If we use the cup and handle, and we've got that thrust indicator giving us a little boost, now you're going to have a clear understanding why we now have this alternate view.
yes.
Thank
So,
you, Sasha. Please continue.
sure. And I'm going to remove that drawings here so you don't get confused by them. So, yes, regarding that alternate primary wave follow here, which I was speaking about, we have another. So when we consider that this primary fifth wave is ongoing, we have 5 waves of minor degree and five waves of intermediate degree followed or underlined by 5 waves of minor degree in the move for the completion point of intermediate 3. A little bit confusing, but we have them here. So I have the starting point of that impulse move, which in that count is an impulse move, starting at that 4th low. We are coming up on an intermediate degree first wave. So there is my little thing I want to talk about later in that section here. But I'm coming to that again later. So we have moved up from here, non-stop moving up, non-stop moving up. This looks like a really nice impulse to me. So that is the wave 1, intermediate wave 1, intermediate wave 2. Then we are following the intermediate third wave, which in my view is not complete. I have it up here. So let's just zoom in. We finished minor wave 3, minor wave 4, and we are in the minor wave 5 to finish intermediate wave 3. Yeah, and that just let's hop in and go into the little bit of internals here because I'm on a weekly chart. It's very, very hard to talk about that because I want to show you some internals here, and I'm going to break it down to the daily chart first of all. So from our low, we have on the 4th wave here, which is still our minor degree 4th wave here. We're moving up in the minor degree 5th wave to complete intermediate 3. This is just in the last leg up of that finishing point of the intermediate wave 3 on that alternate count. So what I can see is that we have finished wave, so the subdivided waves 1, 2, 3, and 4, and we are in the 5th wave now. And this is getting interesting here, to be honest. When I'm going back on my 50-minute chart, because I want to talk about the last possibilities we have on that chart here right now. Michael has also spoken about, and please, when I'm a little bit nervous, it's my first podcast here on YouTube, so please excuse maybe when I'm speaking a little bit too slow, too fast, excuse that because I'm a little bit nervous. So, but we are moving on with the chart, and so we have, in my view, also forming a diagonal pattern in the last leg up to finish that 5th wave of intermediate wave 3. And in my view, we have finished an A, B, C as a wave 1. However, I want to count that out because I see that move here to the top is belonging together. I cannot count any impulse move which belong together instead of an A, B, C. So I see an A, a B, and a C to put wave 1 here. That is the first one I can count on the chart. I'm going to remove that first. Then we got an ABC for the 2, which is also still Michael's count, and I think this is also the one I go with because it cannot be counted different. We got an ABC down, wave 2 after an ABC structure up, so that means it needs to be a diagonal. It cannot be counted different. Otherwise, which I don't like, that this is wave 1, wave 2, wave 3. Wave 4, we did not take out wave 1 high, but that doesn't look right to me. And then this would be the 5th wave, and this would be done here. That doesn't look right to me. I really need to tell you because I'm missing further upside potential in that chart. So the problem I have now is exactly that point Michael was talking about. We we consider that the wave 4 is in here. The problem I have at the moment is that sell-off, we came back and we're starting to sell off again. So we are very close to my trend line, which is forming the lower diagonal trend line here on the chart. And I'm going to zoom in for a little bit so you can see it better. This trend line, I don't want the chart to break out of that trend line. Technically, it's not invalidated until we break that low here, our wave 2 low. Whenever we break that one, this is the first line in the sand where the alarm bell should ring that we have problems with the upside continuation. Whenever this point here is breaking, and I tell you the level, to be honest, it's the wave 2 low, 17 to 20 around this area here. So whenever we break that area, this whole count up here in this diagonal pattern has to be rethought, or we have to rethink about it. What it can be is that we have the wave 1 here. We did an A, B, also not overshooting, but irregular or overshooting wave B, and we're coming down in a flat. So that means we have an A, B, C structure to put the 2 here, but it's, you know, the proportions have to fit also. I need to go on the 1 hour chart. The proportions of that count have to fit somehow. And when we are in a diagonal pattern, the third wave, as Michael also said, is often the shortest wave in a diagonal pattern. So when we consider that, and you can directly see it because that is the move in the wave 1, we got an ABC up in a wave 3. It's definitely the shortest wave. And I was speaking one day with Michael about Fibonacci time zones on the chart. And technically, the chart to fulfill that last leg up has a lot of room and a lot of time building to finish that leg up. And the question I have now, to be honest, and I really want to talk about that because it's very interesting. What is the chart doing here in this sequence? Is it a B wave, A, B, C to finish this? Oh, I need to remove. Give me a second, guys. I need to just remove I don't want to confuse you here too much. Oh, no, I don't want that. I just want to remove that one here. Give me that. Yeah, what? And that. So when we keep the position open that this is the wave 1, we do an A, B, C down, put the 2 in here. The whole pattern moves down, which means it's not a diagonal at the moment, or it's not a diagonal, it's a diagonal, but in a parallel channel. And this is very, very uncommon. So this point I want to invalidate at the moment. It can work for that, but I don't want the chart to do that. So whenever the man or the people with the large enough money to make the markets, we really need to start. What we can do is one thing. I'm going to show it to you. 1 second. That's when I start drawing. I have too much drawing on the chart, and either me or you get confused. I don't want that. So what we can do is here that we have done the wave A. We're coming down in A, B, C, put in a running flat here, and then come up. So it can also be that this is only the A, B, C, and then we put the A here and then come down in a B and then C. Because we were talking about the Fibonacci timelines, and it can take a long time to get this 5th wave done. And also remember, NVIDIA's reporting, Michael, do you know the date? I mean, it's the
21st.
The 21st, okay. So it's not so far. We have now from on tomorrow, Sunday.
Wednesday. They report on Wednesday.
And Wednesday. I think this will be a key decision point on Wednesday.
Yeah.
And I bet the people want to hold the market up somehow until the earnings come out. So when the earnings come out and everybody says, okay, they can't be bad, and they get, I don't know if you say it in English, they get the fist in the head, in the face, and boom, the market crashes because earnings are not so bad or are not so good as expected. That can happen. You know, and what happened when the market doesn't like the news regarding a big of a big company, the market will go down, definitely, because there will be sell-off happening.
One thing I want, if I may add, because this
Sure.
really fits, if you're thinking we're going to get the support and the market's going to rally up in
Mm-hmm.
advance of getting that number, or possibly even just spike after the number before
Yeah.
the market or whomever may reject it. We don't
Yes.
know yet.
Yes.
But I want to share with you that we just talked about that breadth thrust indicator,
Yes.
which triggered back in November of 2023.
Yeah.
Then, so 15%. So it triggered at what you gave me, 16,238 was the exact
Yeah.
level
Yeah.
I took. I went and looked on my own chart.
Yes.
And so 15% is 18,673.
So that would line in my box here. This
It
is the
does line
target.
up in your box there.
Yeah. And this is the target I have on the chart for a long
I
time.
know. That's why I'm tossing that out there.
Yes. Okay, that's a very good point.
So
So I
we,
just, Mhm.
I'm sorry, I don't mean to keep interrupting. So, but what we're doing, folks, is we're gathering all, not necessarily evidence, just suggestions, indicators, and what the norm is when that indicator gets triggered, what the norm is when this gets triggered, and then we're putting that together, and it all will seem to point to a level that we're already showing.
Yes.
And I love what Sasha's doing now because he's making it very clear if we're not going to go there, but we get up close and then we get rejected, then what is it? What can it be? And that's what we're discussing now. So
Yes.
everything stays in play, but you're going to see what our problems are.
Oh
As
yeah.
an analyst, we're like, well, okay, I like it, but what? And I hate to
Yes.
use the word, but what if?
And it's a very good point which you talked about, Michael, because you know Elliot is kind of interpretation, and it's to analyst, it's a little bit different how you see the market structure. And
Yeah,
the problem I was talking about, that point here is that I see 1, 2, 3, 4, 5. I see an impulse down, which has to be followed by a corrective move, which that is A, B, C, A, B, C, B, and the C. I maybe, and that is the point now I have to talk about. The chart will give us a head fake.
yeah,
Maybe break down out of this wedge and then starts to rally. So
yeah.
that we came down in the ABC, put in an expanded flat. This is what you have to take down when you have to take the point A out. It's an expanded flat which
But
takes
we
us
would still
below.
consider it a fourth wave, right?
Yes,
The
exactly.
fourth waves can do that.
Yes, exactly. And the other point is it can also be a running flat so that we don't
Yeah,
have to take out that point and we start rallying before we make a new low compared to wave A.
right.
These
And
possibilities,
the fibs support that,
yes,
that it's reached its low and it just comes in and starts to go.
yes, that is a possibility. Or we're gonna retest the trend line because on a
Right,
running flat, the standard extension is the 0.618. And this is a part becoming to touch the trend line.
yeah,
So
yeah,
I'm going to remove that. So the perfect point for a running flat is always between the 61.8 to the 100 extension, which will bring us down here. But the 100 extension is a little bit, it's too far. So it would not be a running flat. It would be an expanded flat because we're making a new low below here. So that means the market can really dip below our trend line and start running, or it has to start before it breaks out of this trend line. Maybe it will kiss the 61.8 extension level and then rally off, which means we're holding the trend line and the continuation to the upside is there. Because the trend is your friend till the end, I always say, because we always and we keep on making higher highs. Until this higher high sequence is taken out, we have to reconsider the count here. And whenever this is happening, we have to compare the previous low to the next low we are making. Can this be a move directly completed, that maybe the second wave or the third wave is not done or whatever, that we have an A, B, C and start the third here. It can also be, but that would mean we are breaking several routes in the diagonal pattern, where we say the wave 3 is normally not the longest wave, and then it would extend and the third wave is the longest wave. So I really want the chart to put the wave 4 low in here, somewhere here. And then we have our last leg up to do the 5th wave. And this should complete this whole sequence. And I'm going to zoom out here for a second so that you see it and remember it, that our intermediate 3rd wave is done here on this count. So we have one more upside to do in my view, and the sequence to the upside is not done, but the chart or the price, the NQ future has to take off from here. So when we retest that trend line and we say we can put the 4 in here, it's a running flat and we have to go. No talking about differences. This has to then take off. If we break below, it can still be the wave 4, but invalidating this low puts the whole chart on a different level again. Yes, so what else to say on that sequence? I'm going to remove my drawings
I
again.
think that's actually pretty complete.
Yeah, that's pretty complete, to be honest, because I think
actually think it's actually really nice and tight.
and to be honest, when you talk, you don't remember the time. I don't know how long I was talking right now, but okay, let's go. Yeah.
We're doing okay. We're doing okay.
Perfect. So intermediate wave 3 is done. Expecting afterwards is an intermediate wave 4, which is here, and which should bring us down, back down to the next previous wave 4 area, which is here. Price territory not to break in is this wave 1 here. We have this intermediate wave 1 at 13,085. So this is the level not to break. We have certain levels. I'm going to remove that first. But we have
the alternate count, folks. Again, this is the alternate.
Yes, exactly. This is the alternate count. We're just talking about that. So, but when we break certain levels to the downside, then we're talking that we have to shift that, and this the primary count becomes also the primary count, primary count. So, you know, it's like there's a lot out there, but it's still my primary count. But this is really just the alternate count. So whenever this sequence and this price territory here at between 14,842 and 14,034 holds, and we read, oh, so I'm going to go give it, so I'm going to show you. So we are expecting an A, B, C structure down. So it needs to be a 3-wave move down. Whenever this becomes an impulse down on a higher degree, I mean, it can be a 535, it can be a WXY, there can be a lot of different corrective pattern from that top here. But we don't want to see the chart starting with a bunch of impulsive moves. So so this move down in a intermediate degree has to be an A, B, C structure. So when this is holding, we can expect another leg up to finish the intermediate wave 5, the primary 5, and the cycle degree 3. Which, remember, on the primary count is done here. So we have a very, very, very strong pivot point, which is located, and I'm going to give you the price areas again. Just want to remove that. So the price area is a really, really strong one. It's 14,842 and 14,034. Whenever we break down below and take out that wave 1 high we have here, it's done. So that is, we have a very strong one here, invalidation point. And the next strong invalidation point is, let me just do a quick price act here, is exactly 13,074. Whenever we take these levels out, and I wrote to you here, whenever we take these levels out, more downside is expected. So the question is then, when we are done with our, when we know that this alternate count doesn't exist anymore, we know it has to be either an expanded flat, put in a new low, or it's a running flat. Depends on how high or how further the sell-off will happen. Depends also on the world economic, depends on everything else, what's happening in the world. It can be, yeah, I don't want to get in this topic too strong, but there's stuff out there that can really, really take the market down for a very, very strong sell-off. And my view is only if we take the measurements and which extend only to the or sell off to the 0618 extension compared to wave A, and had put the C in here. Don't make a new low, or we have to make a new low, which will bring us down minimum to 10,039. It's amazing. I mean, this these numbers selling off from, yeah, okay, it's another topic. But we have to really, yeah, it's Michael. I mean, we are trading at nearly 18,000 points, and imagine we're coming down to 10,000, 11,000.
Yeah.
It's a question I have also in my mind. What has to happen for that strong sell-off? I don't want to think about it, to be honest, and I don't want to. Yeah, it can be very, very ugly, but don't get so far. We can be just in this healthy corrective move down, which will put this intermediate wave 4 here, and then we have our 5 waves up to complete that. I have to zoom out again, go to the weekly again, so you can see everything. So after, my God, sorry, I don't want that. After we have put in cycle degree third wave, I mean, this can take years, guys. Please don't misunderstand that. But I have that alternate count just on the chart to show you what I mean. This will take maybe decades to finish. We have finished cycle degree 3, then we have the cycle degree 4, and still the cycle degree fifth wave to complete super cycle wave 1 in the NQ future. So
Right.
amazingly,
And then that's the alternate, and under
yes,
the preferred, we still do have that cycle degree 5 to come.
yes, exactly, yes,
So
exactly.
no
That's
matter
what I
what, it just is
yeah.
going to be on the timing.
Yes, exactly. So even if this, yes, exactly, we have to finish that, but then it's cycle degree 5. So cycle degree 3 here done. Cycle degree 5 would be done on our primary count, which is not on the chart labeled at the moment because I changed it over for you to see everything. And I have not the possibility to label different stuff just to put the alternates there. But for us, still primary count, cycle degree wave 3 is done here. Cycle degree 5th wave still in play. So, however, this is following. This is really, really just an alternate count, and that shows you that maybe we have still much more upside to.
Upside before we do the major slide.
Yes,
That's the thing.
because
That's the big difference. If we
yes,
go into
exactly.
that primary C wave now, we're going to
Yes,
end up. And again, it's not like the bottom's going to fall out. It'll feel like it because, again, like Sascha's saying, and I say, we are trading up, closer to 18,000. But
oh
the
yeah,
potential for a primary C wave down brings us back between, I think it was 11,004 down
yeah,
to the lows that we saw in 2022 or just
yeah,
below.
yeah,
So that's still a pretty steep drop. But
oh
the
yeah,
rally that will follow will make what we've done look like kids play. And I'm serious about that.
yeah,
Because we'll have all of the economic factors, we'll have interest, everything will be back in line to propel an economic expansion. And people are looking for it now, and it's like it's just not really there.
oh yeah, exactly.
So, which is, but we cannot underestimate the power of and I'm going to call it what it is, excess capital that's still sitting out there of just continuing to propel it higher to finish a blow off type top.
Yes.
And that could take us beyond what I'm considering would be a B wave.
Yes, and that's a good point, Michael, because we have been speaking about that before also, and this is our both interpretation. The market in this sequence, either it's the primary or the alternate count, is really, 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 really close to a top. Really
Yeah.
close.
Yeah.
It's
Yeah.
really close. I can just underline it again and again. It's really close, and that's why you have these strong sell-offs in between. You have this not clear structure. And it's definitely a point where not just only us think that we are topping soon. I think there's the majority of the people, also the big guys trading that is the same or thinking the same like we do.
Yeah. Yeah. We shall see.
Exactly.
Um, Sascha, thank you.
I
Great
hope I could
intro.
help a bit.
Great intro, my friend. No
Thank
need to
you,
be
thank you.
nervous. You were clear.
Oh, I am.
I know, but you were clear. Everything, I think I followed it. Um, and again, I just want to mention Sascha and I are colleagues and we are joined together in doing our trade room. And so if you had an interest, uh, come join us in the trade room. Our cost is $299 a month, $299 a month, but we go month to month. And so our goal would be, of course, if you decide that you're going to join, that we help you make that $299 within your first week. And so that's how confident I am in the levels that Sascha is giving in our day trading room, and how, yes, sometimes the market is not as always user friendly, but we do
Yes,
find that we do have the opportunity during the day to participate in several of the moves. And we're
yes,
talking that our trade room is in operation 2 hours out of each trading day. And if
yes.
we're saying that within that first hour to hour and a half, we're looking that we're going to show you how you can earn or just at least make what you're paying for the trade room. So in any case, um, again, we're opening up. It's on Discord. And if you have an interest, then please go to www.logicalsignals or just dash trading.com, and you will find the link for the trade room where you can sign up, you can pay, and then you will be given the link to get into the Discord. So again, Sascha, thank you so much for joining me today.
Happy to be here. And maybe I can add one thing, Michael.
Sure,
Is it possible? So
sure.
just regarding the trade room, to throw a little bit of candy out there. So our trade room content is just really intraday based. So we are not, I mean, we are taking a look and we have it in our mind, which is regarding the big picture on the chart and the NASDAQ and the stuff we are trading. But for the people joining us in the trade room, it's really on lower time frames. We have our 50-minute chart out, we have our 5-minute chart open, and we call out levels for you guys to, or for the people, the members of the trade room, to be able to trade the moves we think are going to happen. And I can say, and Michael can also, I think, underline that we have, or that we are giving out very nice content in the trading room for you to take the trades and make the money you need. And yeah, it's just really intraday basis because Michael and I, we are day traders, and that's what we do, and want to help you guys also do that to
Me
become
too.
successful in that.
Yes, that's exactly our goal. All
Yes.
right, I am going to wrap this up. And as I stated on for the S&P, um, the U.S. markets are closed on Monday. Globex will be open. I will be checking Globex tomorrow. And if something totally bizarre happens within the Globex, I'll make a quick update. If not, then Globex will also open on Monday, early evening, 6 p.m. Eastern, and then I will make an Elliott Wave update at that time to set us up for Tuesday's trading. And again, thank you very much, Sascha, for joining and contributing to today. And I want to thank everybody for listening. And again, the next update on an Elliott Wave basis will be on Monday.